Good afternoon, everyone, and welcome to today's webinar on African Continental Free Trade Area and financial markets integration in West Africa. My name is Guy Menan, and I'm the Research and Knowledge Manager with Making Finance Work for Africa. And I will open the session before handing it over to my colleague Alben Kaku for a brief presentation of the Capital Markets Development Trust Fund. Then our other colleague, Mr. Akin Adigun, will take the lead as the session moderator. All participants, of course, will be able to ask questions at the end of today's presentations made by our esteemed panelists, and we will conclude the session in about an hour and a half. During the session, this is for the housekeeping items. During the session, and for your comfort, we request all participants to mute their microphones. Questions can be submitted via one of the two panels on the chat or Q&A tab. Please also remember to lower your hand and mute your microphone after your question. And feel free to ask any question to the organizers, or if you experience any technical issue, we have our dedicated team on the back for help. Finally, slides and recording of these presentations will be available after we conclude on Making Finance Work for Africa's website. And also, please remember to fill out the survey that will automatically appear after the session. This concludes our housekeeping. For some of you who are not familiar with Making Finance Work for Africa, allow me to quickly say that it's a G8 initiative hosted at the African Development Bank. And our mission is the establishment of a common platform to build a more robust and resilient African financial sector. Our donors, besides the African Development Bank, includes GIZ, the German Development Agency, AFD, GIZ's French counterpart, AfCFTA, the European Investment Bank, and Mimbuza, the Dutch Foreign Ministry. We also have European Commission as a member. Today's webinar is a joint initiative, and I'm inviting Mr. Alben Kaku to tell us a bit about the Capital Markets Development Trust Fund before Akin starts the session. At the end of this important webinar, we hope that all participants will get a better understanding of how the Continental Free Trade Area is reshaping African capital markets mechanisms at different levels. Over to you, Alben.
Thank you, Guy, and hi, everybody. So on behalf of the African Development Bank and the Capital Markets Development Trust Fund Secretariat, I would like to welcome you to this webinar for a very interesting discussion today. So the webinar is actually the first webinar organized by the CMDTF Secretariat, so we thought it would make sense to sort of briefly introduce the CMDTF before we give the floor to our speakers. So the CMDTF is actually a trust fund dedicated for the development and support of African capital markets through the deployment of technical assistance and analytics works for Africa capital markets participants. So that's an initiative that we developed last year. So under the leadership of Mr. Nayotambi, the Director of the Financial Sector Development Department, and Mr. Emmanuel Jarrah, the Manager of the Capital Markets Development Division, we designed a proposal for the establishment of this trust fund, and we decided to structure it as a multi-donor trust fund. So essentially, the next step was to identify donors, and as you can markets is not the first priority area for donors, but we are glad enough that we managed to identify 2 donors to join us on this journey. So the first donor is actually Luxembourg, which is represented by its Ministry of Finance, and then we have the Netherlands that are represented by the Ministry of Foreign Trade and Cooperation. So we designed the fund before COVID, but in light of the pandemic, we believe it's become extremely relevant. I'm sure you're aware of the global liquidity constraints faced by the commercial banks. So strengthening the domestic capital markets is really essential for us to help create a new channel to mobilize funding for our economies. In terms of geographical scope, so we've noticed that providing technical assistance on markets is actually an effective way to achieve scale and depth, which is a bit more challenging for individual markets. So as a result, during the first phase and in line with our donors, we decided to focus on the region. So this will be West Africa, so essentially all Ecowas countries. So as I said, the fund was launched earlier this year. We are already processing 5 projects that cover both the Waimu and the Wami zones, as well as individual country projects for Ghana and Nigeria. But later this year in October, we'll be launching a call for proposals in order to identify projects. The key beneficiaries that are eligible under this trust fund are obviously capital markets stakeholders, so your typical regulators, exchanges, central banks, GMOs, CSDs. So that's really the scope of the fund. Briefly, if we can move to the next slide. We actually have 4 main areas that is capital markets, regulatory and legal environment, markets infrastructure, whereby we are supporting CSDs, electronic trading platforms, so on and so forth. Then the third outcome that we are trying to target is to try and diversify the capital markets product offering. So we will be supporting new products, green bond, securitization, SME debt instruments. And finally, we're looking as well to broaden the capital markets investor base. So that's really the core of what we're trying to achieve with CMDTF. So we'll be focusing on regional projects, and that's the reason why actually we identify the topic of today's webinar to launch this series. So hope you enjoy today's discussion, and once again, thanks for joining us today. Back to you, Keith.
Thank you, Albert. Now, Akin, can you please lead the session?
Thank you, Guy. Thank you, Albin. Good afternoon, good day, everyone. You're welcome to this session. The title of the webinar, the topic is on the African Continental Free Trade Area implementation and the financial markets integration in West Africa. We have lined up 4 speakers who are very knowledgeable on the topic. We'll be starting with His Excellency, Mr. Wamkele Mene, who is the Secretary General of the AfCFTA Secretariat. Then we have Dr. Felix Edo Kosi-Amenove, is the President of the African Securities Exchanges Association and the CEO of the BRVM in Abidjan. Then we have Dr. Ngozi Egbuna, which is the Director General of the West African Monetary Institute. And last but not the least is Mr. Ifiot Ihifiot, who is the Head Investment Management Department at the Securities and Exchange Commission Nigeria. I'm the moderator. My name is Akin Adigun. I work in the Capital Market Development Division of African Development Bank. So just a brief introduction of the topic before I hand over to the more knowledgeable speakers. So the African Continental Free Trade Area was created by the AfCFTA agreements among 54 of the 55 African Union nations. It was agreed in March 2018 in Kigali, Rwanda, by the African Union member states. The idea is to create a unified continental market to be established to usher in a new era of industrialization, aid the movement of capital and people, facilitate investments, and deepen economic integration of the continent. When fully implemented, it will be the largest free trade area in the world in terms of the number of participating countries, an economic bloc with a combined GDP of over $2.5 trillion and a single market of 1.2 billion people. If you can move on to the next slide, please. So we've broken down this topic so that it covers as much as possible, also drawing on the experience of the each of the speakers. The key speaker, the SG for the AfCFTA Secretariat, Honorable Wamkele, he will be talking on the AfCFTA implementation and financial markets integration in Africa generally. It will cover the role of financial services under the CFTA, the opportunities for the financial sector and regional financial transactions processing, including payments services. After Dr. Menove, the CEO of BRVM and President of ASEA, will address the progress and challenges and opportunities as well in connecting African capital markets based on the experience of the African Securities Exchanges Association, which is the president. And then we'll move on to Dr. Ngozi Eguna, who will be talking much more, sharing the experience with integrating transition states in the Ecowas region. And then we'll move on to Mr. Hefiok, who will be looking at deep diving into the AfCFTA implementation at the country level and using the Nigerian example. Next slide, please. Next slide, please.
I think you can go ahead.
Okay, so I'll hand over to His Excellency Mr. Wamkele Mene now to take us through his key presentation. Thank you.
Yes, they're all. We are just trying to get Mr. Wamkele Mene in, so please bear with us. Thank you.
Hello, everyone. Just apologies for that slight delay. I think we'll move on to Dr. Menove to start his presentation. And then we'll come back later to Mr. Wamkele Mene.
Thank you again. Good afternoon, everyone. First of all, I would like to thank the African Development Bank and Make Finance Work for Africa for the invitation to attend this webinar. I am delighted to talk today about the role of African capital market integration initiatives can play in achieving AfCFTA objectives. I would like to start my presentation. Can I have the next slide, please? Yes, thank you. I would like to start my presentation by a brief overview of the African Securities Exchanges Association and the AELP. ASEA is the next, please. ASEA is the premier association of security exchanges in Africa. Established in 1993 with its headquarters in Nairobi, Kenya, ASEA works closely with its members to unlock the potential of Africa's capital markets. As December 2019, ASEA, it is 25 members exchanges representing 65% of the African GDP in terms of market capitalization. We have 1,350 listed companies on African markets. The association has 5 strategic objectives. The first one is advocacy, to have our government well informed on our activities and have their support. The second one is enhancing liquidity of our market to attract more investors. The third one is capacity building and knowledge transfer among our members. The fourth one is regional integration. And finally, funding for our association. As you can see, next slide, please. The fourth objective is one of our main priorities. In this regard, ASEA has jointly established with the African Development Bank a Pan-African initiative named African Exchanges Linkage Project, AELP. This project aims to facilitate cross-border trading and settlement of securities across the 7 participating exchanges in Africa, representing 14 countries. The project involved at the beginning the Casablanca Stock Exchange, the Egyptian Exchange, the Johannesburg Stock Exchange, the Nairobi Stock Exchange, the Nigerian Stock Exchange, the Mauritius Stock Exchange, and the BRVM. This project will give the opportunity to list on the same platform different asset classes and most of the biggest companies on the continent, such as Naspers, QNB, Dangote Cement, Zenith Bank, Equity Bank, Maroc Telecom, Sonatel, etc. For ASEA, capital market integration in Africa will facilitate the implementation of the African Continental Free Trade Area. Both initiatives will generate sustainable and inclusive growth, foster resilience to shocks, and increase well-being of population on the continent. I would just like to present briefly, next please, the infrastructure platform of the ELP. All the exchanges that are part of the project will be linked to a central platform, the central order system. Practically, any investor from any country can buy or sell securities listed on another country's exchange using its local broker that will be sponsored by a foreign broker who will execute the transaction. The clearing and the settlements will go through local CSDs. That is the architecture of the platform that will link at the beginning the 7 exchanges that are involved in the project. Next, please. Despite of the tremendous opportunities that can bring a regional integration, we cannot ignore the number of challenges that need to be overcome. I can mention here some of these challenges. The first one is that we have a wide disparity among pilot exchanges in terms of market size, trading volume, market capitalization, number of listed companies. GSC, for example, is more than 140 times Mauritius Exchange. There is no legal harmonized regulatory framework at the continental level because of the law differences between Francophone and Anglophone countries. Due to exchanges development gap, some product and service are not available in some markets. This is the case of ETFs, derivatives in many markets. The continent displays disparities between countries and reflects these disparities in the financial inclusion and the financial literacy that are key for the development of the integrated platform. Finally, I can say that the differences in the professionalism among market participants is also a challenge to integrate our market on the continent. Next slide, please. Next, please. To achieve the objective of the AfCFTA and the financial integration on the continent, I have some recommendations. The first one is that ASEA believes that all the efforts of our organization will fall short short, without a clear and full support from our political authorities. We need to have our government on board. We need to have them informed of the project, and we need to have them make the decision. We need to establish this platform. Secondly, it is very important to encourage the private sector companies to benefit from listing on the integrated platform, as they can access a large pool of financing options. In that regard, it is important to give them some fiscal incentives, especially for SMEs. It is important also to have some privatization on our markets of some state-owned enterprises, because this can represent an important source of capital for our government. Actually, our continent, Africa, is the lowest, has the lowest privatization rate in the world. We think that is important also to involve the private sector in this integration process. As you know, the private sector remains the pillar of the African intra-trade promotion. However, in many African countries, private companies are still reluctant to open their capital through the capital market. The reason is very clear. The capital market are still not well understood and are not promoted enough through our countries. This situation can be resolved through a closer collaboration with the private sector's organization like chambers of commerce. Lastly, AfCFTA believes that the promotion of initiatives like introduction innovative financial products such as green bonds, social bonds, diaspora bonds, will give access to significant pool of capital in Africa. In that regard, allow me to congratulate AfDB for its listing of the largest social bond, $3 billion fight COVID-19 bond on the London Stock Exchange. One of the lessons we learned from the COVID crisis is that the debt market has a great future in the world and on our continent. We think that is important to be prepared, especially to raise money in local currency and develop local savings to increase our financial independence, which is key for us in the AfCFTA dynamic. Thank you for your attention, and that ends my quick presentation. Thank you very much.
Thank you, Dr. Menove, for that very insightful presentation. I think you've shared with us your experience as the president of ASEA in ongoing initiatives to integrate capital markets on the continent, especially using the African Exchanges Linkage Project example. Your recommendations about fiscal incentives for private companies to raise funds on the capital markets, perhaps we'll probably go into that in detail during the Q&A section. But thank you very much for that presentation. Right now, we'll move on to the next presentation, and that's the key speaker, the Secretary General of the AfCFTA Secretariat, Mr. Wamkele Mene. I think it's online now, so if you can move on to your presentation, sir. Hello, can you hear me, Mr. Wamkele Mene? If you can, just unmute your mic. Hello, sir.
Yes, I'm with you. Good afternoon.
Good afternoon. It's very good to have you here. So we'll just move the slides to your presentation, and then you can start on the topic of AfCFTA implementation and financial markets integration in Africa. Over to you, sir.
Okay, thank you very much. And thank you to all of you, the organizers, for inviting me and the AfCFTA Secretariat to talk about how we have envisaged financial services in the context of the African Continental Free Trade Area. Next slide, please. You will recall that the African Continental Free Trade Area was signed and entered into force last year. I will speak a little bit about that. But this slide in front of you gives you an overview of what the presentation will contain. So I will give you a sense of what is the African Continental Free Trade Area, the scope of the agreement, and then I will also talk about challenges in the African financial services sector. Although this is not something that I will spend too much time in, because I think you are very familiar with this area. Then we will also discuss financial services in the context of the objective of market integration in Africa. Then we will talk about the payment system, Pan-African Payments and Settlement System, which we are currently negotiating and almost concluding that negotiation. And I will close with some closing observations. Next slide, please. So as I was saying, on the 21st of March in 2018, the Assembly of Heads of States convened in Kigali, and out of 55 African Union member states, 54 signed the agreement establishing the African Continental Free Trade Area. It then entered into force on the 30th of May, which was a remarkable achievement, the fastest ratified agreement in the history of the African Union. And of course, the act of ratification and the act of entry into force of the agreement establishes rights and obligations amongst the 28 state parties. The market that we are creating has some salient features. It is the largest free trade area in the world. We have an objective of creating a single rule book for trade and investment in Africa to overcome a range of challenges such as fragmentation of rules and regulations, such as smallness of national economies, such as lack of economies of scale in national economies. And we believe that if we establish a single rule book for trade and investment in Africa, we shall overcome the market fragmentation that has existed since the end of colonialism. We are doing this in the midst of a rapidly growing middle class with the attendant growing purchasing power, which positions Africa in future as a very, very compelling market for intra-Africa investment, but also for investors from other countries. You will remember that in 2018, the IMF, in the ranking of fastest growing economies in the world, 6 of the 10 were in Africa. And we right up until the onset of COVID-19, economies in Africa were very dynamic and growing very fast, between 5 and 9% on the higher end of growth per annum. The population is 1.2 billion, as you know, with a combined GDP of 2.5 trillion US dollars. This positions Africa similar to other markets such as India, and therefore it is really incumbent upon us as Africans to create a market that will be very, very competitive, that will enable domestic industries to be competitive, and that will enable the African continent to be globally competitive in future. I did mention that 54 countries signed the agreement. 28 countries have ratified it. I believe if it was not for COVID-19, we would have had more ratifications probably by the end of the year. Our aim is to ensure that the AfCFTA has universal membership in respect of all African countries, and that all African countries commit to the objectives of the AfCFTA. And as you know, the intra-Africa trade is very, very low. It is at 18%. We seek to ensure that within 10 years, we increase this figure to 25%. Africa trades more with the outside world, particularly with the European Union, than we trade amongst ourselves. And so we believe that through this agreement, we will be able to change that. We will be able to significantly boost intra-Africa trade to levels that are comparable to other regional economic communities around the world. Intra-EU trade is at 75%. Intra-North America trade is at 59%. You can see that the percentage of 18% of intra-Africa trade is relatively low. And so we have to work very hard to change that. And that means that we have to establish Africa's productive capacity. We have to build on industrial development to ensure that we trade as African countries on value-added goods, and that we stop being producers and exporters of primary commodities, primarily to European countries. So we have to move away from this colonial model, from this colonial economic model, which is in part what has kept intra-Africa trade at this very low percentage of 18%. Now, the AfCFTA is being negotiated in two phases. We have already, we are almost concluded, but for COVID-19, we would have almost concluded part of phase one, which is trade in goods and trade in services. Phase two is investment, competition, intellectual property rights, and then recently we have been discussing including e-commerce as also part of the phase two agenda. And the idea here is to have a very, very comprehensive agreement that captures all areas of a country's economy, as I say, from investment, regulation, to competition, services trade, which we will talk about in a minute, and of course, intellectual property rights, which has become very, very important in light of COVID-19 and the debates around ownership of the vaccine when it is eventually discovered. For the sake of time, I will just run through this very, very quickly. I think the biggest challenge we have in financial services in Africa is, of course, lack of an integrated regulatory regime, lack of depth of our financial markets, relative lack of integration to global capital and financial markets. Next slide, please. Now, I think this, for me, is the heart of what we are discussing in this event today. The AfCFTA and what it offers and how it seeks to accelerate financial services integration in Africa. And this slide, this part of the presentation is broken up in 3 or 4 different parts. But starting with what is actually in the agreement, we have the protocol on trade in services, and a part of the protocol on trade in services will include financial services. And financial services in the area of trade in services has a wide scope. It is banking, deposit taking, commercial banking, insurance services, asset management. The full range of financial services is covered in the scope of the protocol on trade in services. And the protocol is a legal framework for the liberalization and the regulation of trade in services in order to boost intra-Africa trade and to make a contribution to economic growth and development within the continent, to proceed to a progressive liberalization based on open rules, transparent, inclusive, and an integrated single services market. What I think is also important to note is that the dispute settlement protocol of the AfCFTA shall apply to financial services. So where you have a dispute and you have a dispute in a particular jurisdiction in Africa, you will now have the option of resolving your financial services dispute to the extent that it is covered by the AfCFTA and the protocol in trading services. You will have an opportunity to resolve that dispute continentally at the level of the African Continental Free Trade Area, without necessarily going to London or Paris or any of these jurisdictions where typically we have seen arbitration proceedings that involve two African parties that are in dispute. We now will be able to resolve these disputes in our own context, in our own legal framework, and the adjudicators will be skilled lawyers in international trade law and international investment law, whatever the area of law is involved. This protocol, lastly, will contribute, in our view, to domestic and regional competitiveness of the services sector in Africa, and it will enable the African services sector in future to be globally competitive. So these are the underlying objectives of the protocol on trade in services and what we seek to achieve when we implement this protocol. Next slide, please. Now, under the protocol for trade in services, we have various options for liberalization. The protocol requires comprehensive liberalization of the financial services sector. The range of different financial services sector that I mentioned, deposit taking, asset management, insurance, all of them are covered by the scope of the protocol on trade in services. And so the scope of and coverage of liberalization is intended. Our intention is to ensure that all financial services is sufficiently liberalized in a manner that will boost intra-Africa trade, break down barriers to intra-Africa trade in services. That is exactly why we intend to have a very wide scope of financial services liberalization in terms of coverage. We have built on existing models around the world and international best practice around the world, primarily the General Agreement on Trade and Services of the GATS. That is how we have structured the Protocol on Trade and Services, and in particular, that is how we will structure the financial services component of the liberalization under the AfCFTA. And if, as you may be aware, under the General Agreement on Trade and Services of the WTO, there are two very, very important instruments. There's the Annex on Financial Services, which sets out and defines the different areas of financial services that are covered by the GATS. We will also do the same. We will also have we may amend certain aspects of the GATS's Annex on Financial Services because it is outdated. It was negotiated in 1997, but essentially it does set out in the annex. It does set out the key financial services areas. It sets out and defines what is deposit taking, what is asset management, what is insurance services for life and non-life, and so on and so on. The second component, which I think is also important of the as an instrument of the GATS in relation to financial services, is the understanding on financial services. This is where the depth of liberalization is set out in that instrument. For example, in the understanding on financial services, it says that any country that is a signatory to the understanding on financial services shall adhere to higher levels of liberalization than are ordinarily required in financial services in the WTO. And here it is what is envisaged is that in a particular jurisdiction, if you come up with a new financial services product, you are required under the understanding on financial services, you are required to automatically allow that new financial services product to be introduced in your market or in your jurisdiction without your regulator assessing and approving that particular and new financial service from being introduced in your market. So the understanding on financial services, some critics have said this is what led in part to the financial crisis in 2008. It has been subject to a great deal of criticism internationally. However, there are some aspects of it that we will look to as the AfCFTA, such as prudential regulation, which we will come to in a minute. The other model that we have looked at, let's stay on that previous slide, please. Go back, please. The other model that is also important that we looked at in terms of financial services liberalization are free trade agreements around the world. We've also looked at what regulatory institutions and central banks around the world, including central banks in Africa, what they require when they allow foreign banks into their jurisdiction. What type of regulatory requirements do they place on the foreign bank that is seeking to enter their market? So these are all models that we considered in financial services. Now, the last point on this slide, I think, is also important. In the financial services component of the AfCFTA, there will be a set of regulatory principles which will speak to things like, for example, transparency. When you are a foreign bank and you are applying for a license into the country that I'm in, Ethiopia, if Ethiopia is and I'm making an example, of course, If Ethiopia is a signatory and a state party to the agreement, Ethiopia will be required to adhere to regulatory principles that will be pre-negotiated, such as transparency, as I mentioned, such as right to appeal. If a bank applies for a deposit-taking license and the application is rejected by the central bank or the regulator, the agreement will, the AfCFTA will set regulatory principles that all state parties will be expected to adhere to. So this issue of transparency in licensing, you will have the same rights in all state parties. In other words, state parties will no longer be able to apply different sets of regulatory principles. A state party will no longer be able to say, well, we don't have an obligation of transparency. We don't have to tell you why your deposit-taking license was rejected. You are not entitled to all of that information. We have now changed that. We have introduced a set of regulatory principles which all state parties will adhere to. This is in distinction to the role of domestic regulators. We do not intend that the AfCFTA framework on regulatory principles, we do not intend that it should replace national or domestic regulators. No, the role of domestic regulators shall continue, and it will continue as we know it, and that is regulation of market conduct, prudential regulation, and so on. This is something that in the past regulators have raised with us. So I want to assure you that we do not intend to have a supranational regulator at the Pan-African level. What we intend to do is to have a complementary set of regulatory principles that complement the role of the domestic regulator in your jurisdiction, whether it is a central bank or a financial services board, regulator or authority. Okay, next slide, please. Now, the other important part of this effort at financial services market integration under the AfCFTA is we want to create opportunities at a Pan-African level. If you look at the new and innovation and research and development that we are seeing in fintech, clearly there is a need for us to establish to open the markets in order for investment to be able to take place in financial technology platforms across the African continent. But you need a legal framework for that. You need a Pan-African legal framework for the Pan-African liberalization, which is what I spoke to earlier. And I think if we liberalize our financial services market in the context of the AfCFTA, and we do so based on a common set of regulatory principles, we will be creating opportunities in new markets for technology investment, capital investment in financial services in a range of countries across the African continent. There will also be an opportunity to invest and to establish trade finance facilities to support implementation of the AfCFTA. This is something that already AfrExim Bank is doing, but we now want to create scope for more players, more financial services providers to invest in trade finance facilities in support of the AfCFTA. What will continue, of course, is the mobilization of savings. We think that in terms of which the outlets would otherwise be much more limited if we did not have a Pan-African, if we didn't have a Pan-African legal framework, there will now be an enhanced opportunity at mobilizing savings across the African continent in a very seamless way, because there will be a common set of regulations. Allocation of capital funds to notably for finance in productive investment will also be an enhanced and new opportunity at a Pan-African level. And then last, we envisage that there will be opportunities to invest in industrial development initiatives of the AfCFTA. Again, to give you an example, AfCFTA was already doing this, but has signaled that they now are in a position to channel investment in industrial development through the AfCFTA and through the trade that will take place under the AfCFTA. Next slide, please. Now, what we have seen before in other jurisdictions, not just in Africa, before before entry into force of a financial services component of a free trade area, usually, and this is based on empirical evidence, usually the barriers to market access and the barriers to entry in new market access are in the form of lack of certainty and predictability of licensing procedures. If you want to open a commercial bank in a foreign jurisdiction, if in the absence of a free trade area that covers that in the regulatory framework that I spoke to, it's very, very difficult, and it is expensive, and the market itself, you would have to make an assessment that you are going there for the long haul. If there is lack of predictability and certainty of licensing procedures, and as I say, it is costly. So unless you know that the market will actually be worth it, it becomes a barrier to accessing that new market. We seek to eliminate that barrier in the context of the African Continental Free Trade Area. The other barrier that we saw around the world is arbitrary foreign equity limitations. If you are EcoBank and you want to have an equity holding in another jurisdiction, you are limited to, let's say, 10 or 5 or 15% of equity. The rest is typically, the rest would be reserved for national investors. We are here eliminating that barrier of arbitrary foreign equity limitations. There are also barriers in the form of prescriptions on forms of entry. In other words, a particular jurisdiction would say that we will not allow you to come in and participate in deposit taking. You can only participate, you can only enter the market as a foreign representative of a foreign bank. This is a restriction that we intend to eliminate so that African banks have a predictability of the form in which they can enter a particular market, and very, very little restrictions, except, of course, the regulatory requirements that in any case you would have to be subject to by the regulator or the central bank. We also see that limitations on foreign share of total bank's assets is something that in the past was a barrier to creating an integrated financial services market. We seek to eliminate that. Allowable bank activities, capital requirements and expansion of operations, capital adequacy requirements, all of these things were barriers that in this agreement we are going to tackle head on. And as I say, other free trade agreements around the world whether you are talking about the EU 25 years ago, when it was still a free trade area, when they were focusing on financial services market integration, typically these would be the barriers that they would eliminate as a starting point in order to inject dynamism in a regional financial services market. Next slide, please. Next slide, please. Now, one of the ways in which we believe it will be possible to consolidate a integrated financial services market in Africa is by having a pan-African payments and settlement system, which today, as you know, we do not have. At the moment, we have regional payments and settlement platforms in East Africa, in SADC, and in WAMI, but we do not have a platform that will be pan-African in nature. And in this regard, the heads of states directed, the Assembly of Heads of States directed that we work with the African Import-Export Bank, AfCFTA Bank, to develop a platform for payments and settlement in Africa, which we call the PAPS. And the objective is to support the implementation of the AfCFTA to facilitate payments of goods and services in local currencies, thereby boosting intra-Africa trade. We also seek to ensure that the payments, as I said, are made in local currency, with net settlements in foreign exchange, thus saving the continent more than, in our estimation, more than $5 billion in payment transactions per annum. This will formalize, we also seek to formalize a significant portion of the estimated $5 billion in payments of informal intra-Africa trade. So we want to use the Pan-African Payments and Settlement Platform to facilitate formalization of informal intra-Africa trade into the formal sector and into formal trading under the AfCFTA. And of course, the most important is to ensure availability of affordable and efficient payments infrastructure across the African continent. We are now, we have been in discussions with AfCFTA Bank, technical discussions for establishment of the platform for some time. Our objective is that next year, early next year, that when we start trading under the AfCFTA, that the Pan-African Payments and Settlement System is fully operational so that it can support trading under the AfCFTA. Next slide, please. So I leave you with the following observations. The protocol on trade in services of the AfCFTA, in our view, will boost intra-Africa services trade, and in particular, financial services, for the reasons that I've mentioned, establishing a common regulatory, a common framework for regulatory principles, opening new markets, and enabling financial services players to move seamlessly across the African continent, of course, subject to regulatory requirements for each jurisdiction. The liberalization under the Protocol on Trade in Services, as has happened in other parts of the world, will open new markets and it will create dynamism in the financial services sector across the African continent. I think it's also important to note that through the AfCFTA, the Pan-African Payments and Settlement Platform, there will now be free flow of payments and transfers, or should I say freer flow of payments and transfers, which is something that in the past has been very, very difficult. It's easier, I mean, you know it as well as I do, it is easier to transfer funds to the US and to Europe than to transfer funds intra-Africa. And so we intend, through the financial services liberalization component, to ensure that there is a free flow of payments and transfers. I would urge you to pay very close attention to the financial services component of the AfCFTA, the ongoing negotiations, because you are the direct beneficiaries of the legal and regulatory framework that we will establish. And so we have to be guided by you also as the players in the market as to what you think is from a regulatory standpoint and a legislative and a legal framework point of view, what you think is the best for financial services market integration in Africa. Now, this presentation deliberately did not speak to financial integration in West Africa because we want financial services liberalization and integration to be across the African continent and not applicable only to East Africa, West Africa, Southern Africa. Indeed, our mandate as a secretariat is Pan-African to the extent that a country has ratified the agreement, of course. And so this is why you will note throughout the presentation, I have not spoken about West Africa as a region. I have spoken in detail about Africa as a whole, because that is our mandate to address financial services market integration in Africa as a whole. I do, however, believe that most of the points in the presentation are equally applicable to West Africa as a region, or any other region for that matter. For example, the issue of lack of a regulatory framework for a regulatory framework for principles of regulation. We don't have that in Africa at a regional level or at a Pan-African level. And so some of the points that I make in the presentation are equally applicable to West Africa as well as other regions. So I thank you very much for the opportunity to share with you some of our views, and I look forward to further engagement with you. Thank you very much, moderator.
Thank you very much, His Excellency, Mr. Wamkele Mene, for your presentation. You've covered the background, key information on the AfCFTA as it relates to financial services, looked at the challenges and the barriers the CFTA is breaking down, and also the opportunities for the financial sector within the CFTA. As you said, your presentation is broad, is the overview of the Continental Agreement, not necessarily focusing on one region. That is very much noted. I don't know if you will still be able to stay with us till the end, because you indicated you might not be here, but there's just one question that's coming, if you could address that maybe within a minute. And that's on the question goes, the AfCFTA area was originally slated to enter into force this month, July 2020. And what are the impacts of the COVID-19 pandemic on the AfCFTA implementation, specifically on financial market integration? If you could just take that before we move on to the next speaker, please. Thank you.
Thank you. Well, the COVID-19 has caused a delay, of course, and as the questioner suggested, the heads of states had decided that we start trading on the 1st of July under the agreement, but that has not been possible. Borders are closed. Out of 55 countries, 42 in Africa are either in a full or a partial lockdown, and therefore it is not possible to say that we are trading. And of course, African governments are focused correctly so, quite sensibly in my view, are focused on saving lives of Africans as a matter of priority and are focused on fighting the pandemic. We have now been given a new deadline by the Assembly of Heads of States of starting to trade under the AfCFTA on the 1st of January 2021. And we are working very hard to ensure that we meet this new deadline. This will affect also financial services. The ongoing negotiations on financial services are, of course, affected by the delay in operationalization of the agreement itself. But I think that we should not see the postponement as lack of political will. The political will is still there. The commitment to liberalize intra-Africa trade and to boost intra-Africa trade is still there. We, however, are faced with an unprecedented crisis, which we thought that governments should be given the space to focus on and to fight the pandemic. And then we will resume our work and redouble our efforts as we move towards the 1st of January 2020. Thank you very much.
Thank you very much, sir. Thanks for the presence here today. Thanks for the presentation. Audience, so we'll be moving on to the next speaker. But before we do, please provide your questions in the chat box for any of the speakers, and we'll address that during the Q&A session. Our next speaker is Dr. Ngozi Ebuna. She's the Director General, West African Monetary Institute in Ghana. And then she will be speaking on the topic, how the AfCFTA can catalyze financial markets integration in the fragile states in Ecowas. Over to you, Dr. Ebuna. If you could unmute your mic. Yes, yes, we can hear you. Please go ahead.
Good afternoon, distinguished ladies and gentlemen. All protocols observed as existing. Let me start by saying that it is my pilgrimage this afternoon to be associated with the ADB and her partners on this webinar on the topic that I have been given. My mandate is to talk about accelerating financial integration in ECOWAS within the framework of the AfCFTA. So for me, it is a very exciting topic, both because I am passionate about regional integration matters, but also because it's one of the mandates of WAMI. Having said that, I would like to, at this point, go through the agenda for today's presentation. I'll give a brief introduction, explaining what financial integration is all about, then talk about the nexus between that and after, then explain what ECOWAS is, and all these are under the introduction. Then I'll talk about financial integration in West Africa, regional initiatives towards financial integration in ECOWAS, recent initiatives that we've gone into in ECOWAS, mention some challenges and recommendations, and then I conclude. Having said that, financial integration, we all know, refers to a process or market which is either institutionalized, that broadens and deepens links within a region, for instance, ECOWAS. Can we go to the next slide, please? Basically, it eliminates barriers to trade and investment, and then welcomes treatment of foreign investors. It also brings about effective intermediation of funds from surplus units to deficit units. But the most important thing here is that it intensifies financial integration in ECOWAS because it helps us to catalyze and achieve growth that is mutually reinforcing for the economies of either the region or Africa as a whole. Having said that, ECOWAS, as you know, has financial institutions, and the financial system is mainly made up of 332 banks, about 232 banks, about 300. Shallow fragmented. Industrialization because
Hello, Dr. Egbun, are you there? Can you hear me?
yes, I can hear you.
Okay, I think there's a bit of the background noise. We lost you for a while there. There's also a bit of echo. Sorry, so if you could mute your phone or whatever you're using on laptop.
I don't know where they're coming from.
So if you could just go ahead quickly also.
Okay. Yeah. Where did you lose me? Hello?
I think you go ahead with this slide. It was just going off and on, so I just wanted to call your attention to that. But you can
hear me now?
Yes.
Okay. All right. So for us in WAMI, no, for us in, sorry about that. ECOWAS, the AfCFTA, therefore, provides hope and promise to unlock the substantially untapped potentials in intra-African trade. Like the executive secretary had said of AfTA, it's supposed to be on by now, but it's been postponed to 2021, and the potentials are huge. For instance, it is a market of about 1.3 billion consumers. It's also a market with a GDP of $3 trillion US. It promises to boost wages for women and unskilled workers, as well as regional income that is estimated to be boosted at 450 billion US, according to the recent publication by World Bank. You all know that ECOWAS, as an institution of the West African integration, was set up by West African countries in 1976, and the 1975 under a treaty. And Article 2 of ECOWAS community states that the treaty is to promote cooperation and development in all fields of economic activities, particularly on the fields of trade, transportation, telecommunications, energy, agriculture, and so forth. And so ECOWAS, with a population of 388 million people, a total land mass of 5.1 million square kilometers, with a combined GDP of $692.6 billion US, and per capita GDP of $1,258 US. You would agree with me that it's a formidable market. The export receipts is estimated at about 1,100 billion US. So that's how huge the ECOWAS market is. Now, financial integration in ECOWAS is is an initiative in the West Africa as part of the being pursued in line with the 1994 General Agreement in Trade and in Services, which is also in consonance with the trade in services component of AfCFTA. Ecowas, in pursuit of financial integration, has tried over time to harmonize existing laws and regulations, as well as the framework on the provision of operational issues, services, as well as soft infrastructure within the financial market. In specifics, broadly speaking, financial integration in ECOWAS includes things like capital account liberalization, regional currency convertibility issues, bank and non-bank financial institutions integration, as well as capital market integration, and also the harmonization of legal as well as regulatory issues in banking sector. We even have a model for bank operation, which is currently in use, and then we harmonize the legislation on cross-border payment systems. Can you please give us the next slide? The next slide. Specifically, under the College of, under the financial integrations issues, we have a College of Supervisors in the WAMS. And the College of Supervisors of the banking sector, the main objective there is to foster cooperation among member states on financial integration issues, mainly revolving around harmonization of practices like the risk-based supervision efforts. We have the banks carry out joint examination of banks, especially Nigerian banks, with the host member central bank supervisory staff. We also have rules and regulation framework for banking sector, like the banking model that we adopted, as well as enhancing cooperation in terms of sharing information and other issues that might come up from time to time. We also have a college for non-bank financial institutions, which we just started sometime last year, to exchange ideas and information, as well as for peer review and development of standards and guidelines. Then under the same college, we also, under the same financial integration, we have West African Insurance Supervisors Association, with main objectives to ensure that they enhance exchange of information amongst them across board, and then standardize their practices and give them guidelines on how to operate across the sub-region. The slides are not moving, please. May I call for the slides to move? Can you move the slides, please?
Yes, please indicate when you estimate that we need to move the slides.
Okay, all right. I'm on slide 7 right now. Slide number 7. Can you please move the slide to slide number 7? All right. So on capital market integration issues, the West African capital market integration was set up with the objective mainly to harmonize regulation for the issuance and trading of financial securities, basically talking about the common market. And the program is in 3 phases, but with 2 operational arms guided by the Ecowas Commission. We have the WACMIC, which is the governing body for the integration of capital market, which was set up in 2013, with participants from mainly the stock exchanges and central security depositories within the sub-region. We also have WASRA, which is the regulatory body of West African Security Exchange Commission, regulatory bodies. And that commission is also charged with the responsibility of fostering closer collaboration and interfacing with the security commissions to make sure that the WACMIC program is on course, all towards having a common market for capital market issues. The program is in 3 phases, like I mentioned. We have the phase 1, which is the sponsored access. We have phase 2, which has qualified West African brokers, which is where we are currently, where we will design a common passport for trading across the sub-region. And then the 3rd phase will be the integrated West African securities market, which is going to be mainly enabled by technology. The next slide, please. That is slide number 8. Under quoting and trading, the rationale for quoting and trading is basically for convertibility of the foreign exchange. And the main objectives are include the fact that we need to conserve scarce foreign exchange in the sub-region, as well as the reduction of cross-border transaction costs. We also want to use this and escalate. We wanted to use it to escalate the issue of payment and settlement system issues in the sub-region, as well as reduce the number of informal sector operators within the sub-region. But luckily for us, we'll come to that under the payment system development. The next slide, please. Under the payment system development, we have a regional payment system infrastructure that was fundamentally set up for us for the financial market integration to serve as a platform for payment and settlement of transactions. WAMI, the West African Monetary Institute, if you remember, when I was giving the introduction, I talked about the peculiarity of Ecowas. Ecowas basically is made up of countries, some of whom are already a monetary union, and some, like the Anglophone West Africa, which is basically on the institution that set up WAMI, that are 6 countries that are working towards a monetary union. However, Ecowas collapsed it in 2014 to a single track, and that's what we are working on right now. So you see the peculiarities that we have playing up from time to time. Under this payment system development, WAMI undertook a development initiative to make sure that we upgraded our payment system platforms. And so in 2012, we got funding from the ADB to implement the payment system development upgrade through a project for our countries, 4 of our countries that were lagging behind, namely Gambia, Guinea, Liberia, and Sierra Leone. This project was concluded successfully in 2016, and all of these platforms have gone live, and they are modern and state-of-the-art facilities that have been installed thanks to the ADB funding grant. Under this payment system platform development tool, we have what the Executive Secretary of the AfCFTA talked about earlier on, the PAPs. While trying to work on the quoting and trading issue, we got talking with AfriExim Bank, and AfriExim Bank has gladly tried to set up cutting-edge infrastructure to ensure that the Pan-African Payment System settlement goes off. And the PAPs, which is called the PAPs is using the WAMs as a pilot for a continental payment system platform, which is expected to be rolled out as soon as possible. In fact, it was delayed because of the COVID-19 pandemic and the closure of most of our economies. Having said that, PAPs would provide a platform for quoting and trading in West African currencies. And once it goes live, it will be escalated to the Pan-African, to the rest of Africa, and is a major fulcrum for the implementation of AfCFTA that was mentioned earlier on. So now I would want to just give you a brief bird's eye view of the recent initiatives that we have started in West Africa towards the financial market integration in the region. Chief amongst them, these are just some of them, but chief amongst them is the fact that we are hopeful to receive a grant from ADB. We have gone far. We are working towards a phase 1 of grants to make sure that they develop our domestic debt market in West Africa, because we acknowledge the fact that some of our countries are just the debt market is very, very nascent, and we needed to make sure that we upgrade them through use of technology, as well as their practices, laws, rules, and regulations. And we are hopeful that we will get the funding as soon as possible through ADB. Also, funding has been approved, and 850,000 US dollar has been approved for implementation of phase 2 of the capital market integration issue I mentioned earlier on, which is supposed to be the second phase under the Qualified West African Stock Brokers arm. And that is part of the WACMI program, and that will effectively kickstart the integration process, because they will be issued a common passport, which means they can trade across the sub-region. It also means that the Securities and Exchange Commission, as well as the stock exchanges of Nigeria, Ghana, the UMOA, as well as Cape Verde, will be integrated under this program. Also, we propose and we hope to get funding for the implementation of unique bank identity for WAM's member states. You will agree with me that across the sub-region or Ecowas sub-region, we have various things in place. For instance, Nigeria has successfully done their bank verification number exercise. Ghana is currently doing their own. In the Gambia, for instance, we have the TIN, that is the PIN, personal identification number, but that is not recognizable. And so we sought funding from ADB to do a unique bank identity project, so that if you have a card and you are identified as Ngozi Ebuna, you are Ngozi Ebuna across the sub-region. That is also to ensure that we are ready for AfCFTA. Having said that, it is instrumental to mention at this point, the next slide, that financial integration in ECOWAS, especially looking at it through AfCFTA framework, is currently not in its best form. There are still challenges that would, if not worked on, will impede the success of implementation of AfCFTA. And we have mentioned some of them here. Chief among them is the lack of compensation scheme for potential loss of revenue from the removal of tariff among member states and external partners. What I mean here is that under ECOWAS ETLS, as ECOWAS Trade Liberalization Scheme, we had a compensation scheme whereby countries who are supposed to lose revenue because they are into ETLS were compensated, and then it was timed. And when everybody had signed in and we had balanced the loss of revenue effectively, we stopped the ETLS compensation scheme. And so we are saying that in order to make the implementation of AfCFTA successful, we need such a scheme as soon as possible. We also have weak competitive ecosystem in member states, as well as delay in undertaking structural reforms required to implement the scheme within our countries. Also, a major challenge is the non-existence of functional stock exchanges in some of our countries in the sub-region, which is hampering capital market integration. Also, we have existence of differences in trading platforms. Like I said, we are hoping that we will get funding from ADB so that we harmonize the trading platforms of our stock exchanges in such a way that whatever it is that you're seeing in the BVRM will be what you will see in the Nigeria Stock Exchange and what you would see in the Ghana Stock Exchange using technology. We also have an issue of non-convertibility of the WAMs or ECOWAS national currencies. Presently, we have the WAM's national currencies not in sync with others. And so it's a challenge for cross-border trade flow, as well as it limits trading. We are hopeful that when the PAPS comes into place, it will eliminate that particular problem. We also have data issues as well as awareness issues in terms of making sure that our stakeholders are well sensitized about AfCFTA and the things that we are doing within the sub-region, especially with respect to financial integration, because like I said in the earlier slides, financial integration is key when it comes to trade issues, when it comes to movement of people, goods, and services. Having said that, we have some recommendations, and I had alluded to them when I was making sure that we went through the challenges. Key amongst them is the need to establish a revenue loss compensation scheme in AfCFTA, in the AfCFTA protocol as part of the implementation strategy. We also want to make sure that we recommend that we align national strategies with a provision of the AfCFTA to take advantage of the opportunities that the agreement will offer us. Also, we need to incorporate the obligations of AfCFTA in our national laws, rules, and regulations. We also need to fast track the implementation of cross-border payment and settlement platforms as soon as the COVID issue is off, especially trying out everything that we can with the pilot coming up of the WAMs. If the pilot is started and is successful, then it will be easy to establish it across Africa. We also need to establish, the next slide, please. We also need to establish a functional stock exchange within some of our member states. Then develop and implement an exchange rate mechanism, as well as establish national committees to facilitate the implementation of the AfCFTA agreement. Let me say here that it is important that we do that, because if we don't do that, given the fact that our rules and regulations, as well as the things that we are doing within our countries, are varied and fragmented, we would have issues implementing the AfCFTA. As a way of concluding, I would say that the regional financial integration has the potential to address several issues associated with small, shallow markets like we have in Ecowas. But like the executive secretary mentioned when he was making his presentation, Africa is the only continent that does not trade amongst itself, which is a big shame. And AfCFTA will make Africa the biggest free trade area in the world. That is something that we have to think about critically, creatively, and make sure that we make the most out of it. This century, I must say, is a century for Africa. Everything that is going on now with the trade wars between the two giants, China and the US, as well as protectionism things going on in the world, we only have our homegrown AfCFTA to deal with. And so in today's world, post-COVID especially, it is the only path to economic development and growth for Africa, as well as the only path for diversification and inclusion for our dear continent. On this point, I will thank you very much for your kind attention.
Thank you very much, Dr. Ngozi Eguna, the Director General for the WAMI. You have spoken about the AfCFTA, how it can catalyze financial markets integration, Ecowas, these are examples of ongoing efforts for market integration at the transition states. You touched on currency compatibility and payment systems development, and concluded with the challenges facing market integration, as well as the recommendations to overcome those challenges. Dear audience, I know we're pressed for time. We're a bit outspent our time, but if I can just ask for another 10 to 15 minutes, we should be done. We have one more speaker, a very important topic, so we will round up on this for us. Please keep your questions coming. The ones we cannot answer here, we'll share with the speakers, get the responses, and send them to you by email. I'll just move on to the last speaker for today, Mr. Hefiot. Hefiot is the head of investment management at the Securities and Exchanges Commission, Nigeria. I will be speaking about the Nigeria's capital market experience and how we can take advantage of the African Continental Free Trade Agreement. Over to you, Mr. Hefiot.
All right, thank you very much. Thank you very much, Akin. Good afternoon, ladies and gentlemen. Good afternoon, organizers, Making Finance Work for Africa, Capital Market Development Trust Fund, AfDB, and fellow presenters. It's a privilege to come and present a topic which I have before me. I take cognizance of the challenge in terms of time, and I'll try to rush through my slide and not compromise the worth of the presentation. So let's start first of all with a background, just a brief background into the Nigerian capital market. So can we have this next slide, please? Thank you very much. I'll just take us through the background of the capital market in Nigeria, and then look at the advantages we have. So very quickly and briefly, this is a table that shows you the overview of capital raising in Nigeria in terms of equities. On the first column, you have equities, and that talks about initial equities raising in the primary market, and then also is an aggregation of the initial primary offers and subsequent equities offer. Then the next column is all about government issuances of the federal government. Next is subnational, which is state governments. Then you have corporate bonds that have been issued in Nigeria. Then supranational, like AfDB and the rest of them. Then you have the mutual funds. Now, in total, you will see a total aggregation of capital raised in Nigeria from the period in question from 2003 of about 128.7 billion, and till when this data was put together, they're still putting up more data for the current one, and as of 2018 to 2.08 trillion. Now, the reason why can we go to the next slide, please? Thank you. Okay, now you can see the fact that over the 20-year period, compounded annualized growth rates in capital raising for different security types, we had equities, CAGR was 17%, government bonds 11%, subnationals 19%. The corporates really did faster, in terms of rates of movement, 33%, superannuation was just 1%. Then the mutual funds, collective investment schemes, were 21%. Next slide, please. Now, the reason why I'm bringing an overview of this is the fact that I want to speak to the issue of, if you look at capital raising in terms of equities, it spiked up between 2008 to 2010, thereabout, and then began its sharp decline around 2010, obviously for the fact of the effects of the market crisis in 2008 and thereabout. Then while it was going down, federal government issuances was rising up. Now, what I want to say there is the fact that over time, and from 2013 to 2018 currently, primary offerings in terms of equities, which are meant to be in terms of for the long term, have really not done so well. People have not been coming to raise up equities the way it's supposed to be. And so you have much more of government raises, and people are much more playing safe by fixed income bonds, and the rest of them are short-term money market capital raising. Now, I will speak to this in terms of the fact that vis-a-vis the integration. Every country has a peculiar economic strength. And I'm speaking like a portfolio manager right now. So every country has a peculiar economic strength. So you can say that each country has its own beta in terms of vis-a-vis the whole African economy. Now, in portfolio analysis, portfolio construction, the key thing to do is to take these different economic trends and strength and to put them together, and you create what is called a diversification. And in the diversification, what you do is to mitigate the risk of just being focused on just one asset class or one security. So now we can put that up and raise that up on the African level and see the fact that the reason why Africa has not been doing well is that if you look at Africa as a portfolio and see the fact that each country in Africa have their unique trend and economic potentials and strength that are unique. So Ghana is different from Nigeria's economic overall. Rwanda is different from Ghana and South Africa and the rest of them. But they all have their strengths. Now, if you put them together, you now have a diversified portfolio of African countries. And this is what makes the AfCFTA dream a wonderful thing that Europe has been leveraging on, have been doing well, and all the rest of the world have been doing well. So now you need to create a portfolio of African countries, African economies, and create a synergy in that regard by the reason of the diversification of the potential unique capacity, economic capacity of each African country. And this is where AfCFTA comes in. And this is if I say timely, maybe we should have done it years behind, but it's timely right now. And in that regard, let me come back to Nigeria, for example. Now, if you look at the fact that Nigeria's economy is so tied to oil, now the oil market is, we all know about that. I don't need to take us through and waste time in that regard in terms of the challenges in terms of the global oil market, the crisis, the shale oil and shale oil the issues, and even with COVID now. But the African countries are not, whose economy are not tied to oil. And so now, if you have a diversification of Nigerian investors now, or corporates going out to an African country to list and to raise up money from there, they diversify. And so at the end of the day, you are now having a Pan-African portfolio, and you're not just raising money from Nigeria alone. So you mitigate the Nigerian risk by maybe investing on a Pan-African platform. And this is where I'm going to. The next slide, please. All right. So now I'm going to talk about the collective investment schemes. And this is very critical. Now, collective investment schemes, otherwise called mutual funds, are investment vehicles. So they pull funds, and they are institutional investors. And as institutional investors, they're very critical in terms of deepening the exchanges and markets. So all over the world, you have mutual funds, collective investments, and pension funds deepening securities market. Now, so Nigerian investment CIS fund has been a good story over the years, and in terms of the rapid rise. You'll be surprised that currently, as it is right now, the Nigerian collective investment schemes portfolio moved from what it was as what Mr. Efiok, are you still there? Hello, Mr. Efiok. I think we've lost him. Just give it a few minutes and see if he can come back in. Thank you. Mr. Efiok? Okay. I think while we're waiting, we can just, we're already coming to very close to the end. So we'll go to questions. All we plan to do is one question per speaker, so we don't take too much of the time. So there's a question for Dr. Amenube, the president of the African Securities Exchanges Association. I'm back on. Oh, you're back on, Mr. Efiok. I'm back on, yeah. I'm back on. Okay. Sorry about that. Yeah.
Okay, all right. Please go ahead.
All right, now. So there's a huge movement in terms of our collective investment. And now the collective investment mutual funds are insurance investors, like I said, and their potentials for introducing products, if you now have them on a continental basis. In Europe, in the EU structure, you have passporting of collective investment schemes. And you have what you have in Europe, what is called UCITS, undertakings in collective investments in transferable securities. And these vehicles can invest around any country in Europe, and the same thing can be done in Africa, whereby you can have a mutual fund, maybe authorized in Ghana, that can invest in Nigeria or invest in Cape Verde or anywhere. And in that regard, you can have a situation where countries like South Africa or Nigeria that have different kinds of mutual fund products like ETFs, REITs, real estate investment trusts, and all these kind of things, they can also sell these products on a Pan-African basis. So you can now have investors in different African countries invest in these products that are maybe originating from a particular country in Africa. That's number one. That's one part of it. Also, too, you can also have asset managers who can also bring into their portfolio securities of other African countries and build it into their portfolio, creating also the diversification on a Pan-African basis. In this regard, I'll speak to something we're trying to do, what we've been working on in Nigeria for now in the asset management sector. So we're trying to create, bring in a rule that allows mutual funds to invest in securities of other African countries at a particular proportion percentage to enable a creation of a diversification of their portfolio on a continental basis. One of the challenges we've had in terms of having to actualize our rule for right now is the issue of what is the central bank guidelines in terms of requirement for capital importation and all that, and so on and so forth. So this is where issue of having to create seamless handshake of regulators comes into place. But that itself is one key way that we can create a Pan-African funds that will bring in different products into different markets and exchanges in Africa. Next slide, please. Next slide. All right. So taking advantage of the African Continental Free Trade Agreements, one is, of course, effective capital raised by African companies. So, I mean, a company in Nigeria, maybe Dangote can raise capital in Rwanda or anywhere. I think it's been spoken to already. Investment and repatriation of capital and income, investor protection. I mean, others people have spoken to all this. Disclosure of information transparency. Now we have a SEC rule 4054 to 419, that provides for capital raising and offering of foreign securities in Nigerian capital markets. So already we have in our framework provisions that allow for foreign companies, maybe maybe if it's Gambia or Morocco, and if you're already registered by the regulatory authority over there, you can come into Nigeria and admitted into the Nigerian exchange over here by the fact that you have already been registered. Then we also have standardized rules through guidelines for African corporates and issuers to measure compliance to raise capital within AfCFTA spirit. So what I'm saying here right now has been spoken to by the president of Dr. Mene in terms of the issue of having to have guidelines that are complementary to domestic regulatory framework. Next slide, please. Next slide. All right, thank you. So secondary market opportunities and liquidity facilitation within AfCFTA regulatory framework. So is to process listing securities of African corporates and issuers on Nigerian securities exchanges. So we want to see whereby there's a greater ease for securities of other African corporates. We can take advantage of that by making the listing requirements easy for them, and giving some incentives for issuers of other corporates in other sister African countries to list in a seamless way on our securities exchanges. Then multiple listing of companies listed and traded on other recognized exchanges. Then enable OTC transactions in unlisted securities. So this is going to allow, capital to flow to small cap companies, so that we have an NASD, something similar to NASDAQ in America, in Nigeria. So, and that allows for unlisted company stocks to be traded, so that it provides liquidity. So that can also be extended on the Pan-African basis, whereby companies that cannot list on the big exchanges, if you invest in the investors who hold this investment can trade OTC and then have a secondary market provision for them to create liquidity. Multiple listing on and trading on Nigerian securities exchanges. Let me not repeat that. I think I've said that already. The rule in SEC Rule 105 and 211 permits multiple listing of securities. Next slide, please. Next slide. Thank you. All right. So now, I think I've spoken already in a point to the CRS, and so I don't want to repeat that for the sake of time. And as like I said earlier on, the CRS products in Nigeria grew by a geometric mean rate of 25.4% over a 7-year period. That was a very good one for Nigeria. And like I said again, the unit trust collective investment vehicle are a veritable potential that Nigerian asset managers can use, one, to diversify their portfolio by investing their portfolio in other African corporates, then two, by also selling their products, whether as equity fund or faith-based fund or bond fund or money market funds. They can sell that in different African securities markets across the globe and also achieve diversification. Next slide, thank you. Next slide. So opportunities for the establishment of interregional capital market infrastructure, opening the Nigerian capital market to intra-regional capital and securities market activities will provide a window for investment and upgrade of existing market infrastructure. Let me not speak to that because the first speaker before Dr. Mene, the president of the African Securities Exchange, has already spoken to this already, so I don't want to repeat that. He has given them insight into that already. So next slide. Thank you. Next slide. Next slide, please. Is that the end of my slide? Can you hear me?
Yes, we can hear you. I'm going to try to contact my colleague.
Next slide. Okay. All right. Let me go for it. Okay. Thank you very much. Now, let me speak in terms of fintech. Now, the Economist Magazine Intelligence Unit report. I mean, if anything we can pride Africa for, it's Africa is believed to be the cradle of fintech globally. And we give credit to Kenya for that. Now, so that's a big one from Africa. And the rate of growth of fintech in Africa has been is a great success story that we need to leverage on in Africa, and particularly also in achieving this integration we're talking about. I want to talk about Nigeria, for example. Now, there's a forecast of a 24. I mean, globally, the Economist Magazine talks about a 24% growth forecast for fintech. Now, in Nigeria, it is believed to there's a forecast that's from an aggregate income of $153 million in 2017 is going to grow to $543 million. Now, we're seeing that even in the capital market. Initially, we've seen fintech was basically for payments solutions. And also, you can see that Alfina look at fintech as a way to achieve financial inclusion. But fintech in Nigeria has gone beyond that massively, and we have fintech that have developed digital applications as a platform for investors to invest in mutual funds, for investors to invest in agriculture. That's a big one. We have Farm Crowdy. And then also we have large fintechs that are also pulling funds in terms of crowdfunding. Now, the president of the AfCFTA talked about issue of developing framework. And I can say here that in the SEC Nigeria, we've already collaborated with the fintech association in Nigeria. Now we are putting finishing touches to the rule on crowdfunding. And we did the rule, we exposed it to the public. We had feedback from World Bank and everybody. I'm on the rules committee, so we're putting all the responsibility from stakeholders to our rule on crowdfunding. That itself can be leveraged upon by the continent in terms of the fact that we've done something in that regard. Now we've also worked on rules for we're working on rules for for fintech, and we're working together with the fintech guys to look at areas of fintech that fit into the capital market and to guide them in terms of structuring. Now, not that these guys are savvy geeks in terms of technology, but in terms of the structure of the market, they don't really know it. So we've been talking to them, working with them, and bringing what they have in terms of technology to fit into the capital market framework and market framework, given the huge potentials of what fintech holds in terms of penetration and in terms of bringing those who are excluded to be part of, to invest in the capital market. Now, we also see development whereby authorized asset managers are now using fintech to market their funds and prospect their clients and so on. So recently, that was about before, I think just at the onset of COVID, Ecobank EDC asset managers did a demonstration of the fintech application in terms of their mutual funds, to use the fintech application for their mutual funds to onboard clients and to market clients and so on. So these are areas where, particularly for fintech, is what we see as a veritable tool whereby Nigeria can, given its potential and what you're seeing in terms of the involvement of fast-growing rates of fintech in the fintech space, that we can leverage on in terms of the AfCFTA market integration. Now, to finally to round up, I believe that we can also, this is not on the slide, sorry, this is on the slide. To round up, one of the things we need to do, Nigerian capital market, to take advantage of the African free trade agreement, first of all, number one, is to sensitize the Nigerian capital market stakeholders. This is very key. And I think that other parts of the continent should do that, because right now what you're seeing is that whatever is going on right now is just going on in terms of the professionals and AFDB and the rest of them. Like I talk about Nigeria right now, how much does the market know about what is going on in terms of what is going on in terms of policies, regulations, and plans and things like that. So we need to sensitize the Nigerian capital market operators on the need to leverage on the AfCFTA framework and what proposals are being made. Now, SEC normally organizes what is called the Capital Market Committee, CMC, whereby all market stakeholders come together. And I think that, I believe that we're going to push this. I'll also propose that we should have a chair, a particular section, and I think AFDB can work with us in that regard, where you can continuously have a continuous update on what is going on in terms of AfCFTA in that regard to all the market operators and the benefits for that. That's number one. Then number two, we also can go ahead, like I talked about earlier on, to get our asset managers to also come up. We can come up with a rule in terms of, like I said earlier on, like using the EU example, passporting CRS funds, and say, okay, if we authorize you at the best standard, at the best regulatory.
Hello, Mr. Efiok, are you still there? Mr. Ifyok?
Can you hear me? Thank you very much.
Yes, I can hear you. Thank you very much. I believe you're okay. Thank you very much for your presentation. Try to do justice to this very topic within a short time. So thank you. Thank you, audience, for your patience. We are gradually coming to the head of the webinar session. At this stage, what we'll do is we'll just take one question directed at each of the speakers here. And then from there, they will give us their closing remarks. So just one question, I'll ask Dr. Menove, and then he will just give his closing remarks as he's answering that question in a minute. And then also see Mr. Ifyok is still on also, and then Dr. Ebuna will do that. So for Dr. Menove, just your question, and then as you give your closing remarks, there's a question here from from Shaw Gax, and then he's saying, in the West and Central Africa, mainly CIMAC, the states requests they access the money market for long maturity bond issuances instead of the capital market. I think maybe he's talking about exchange on market. And that should regulations eliminate this practice or let the market act? I don't know if you got that, Dr. Menove. Question is from Mr. Shirley, and he's saying, in the West and Central Africa, mainly in CIMAC region, the states access the money market for long maturity bond issues instead of using the whether it's the debt market or the stock market. So he's saying, should regulations eliminate this practice or let the market act? So you can answer this question in maybe a minute and then closing statement also. Thank you.
Okay, thank you, Akin. I think that is something we have actually in the West and the Central Africa. It is important to have some discussion between the central bank and the market regulators in these two regions to talk about this issue, to find some solution, because it is important to see a kind of demarcation between the monetary market and the capital market. But actually, we can see some government issuing bonds on the monetary market for 10 or 15 years. But the market cannot solve this problem. It is important to have a discussion between, as I said, the central bank and the market regulators to find a solution, to clarify that, and so we can see which kind of market will handle what kind of issuing. For me, that is very important. We started some discussion in the West on that, and I hope that we can share some of our thoughts with the Central region. Thank you.
Thank you, Dr. Menove, for that answer. Dr. Ebuna, there's a question here for you, and that's what are the incentives that can be provided to local manufacturers so they can export from one African country to another?
It is for...
Question is for Dr. Ngozi Ebuna. Are you still there?
Yes, I'm.
Okay, so the question is around the incentives that can be provided to local manufacturers so they can export from one African country to the next.
Okay, thank you very much for that question. Like I said earlier on, can you hear me?
Yes, I can. Please go ahead. Yes, please go ahead.
Like I said earlier on, we are proposing the establishment of the revenue loss scheme. And once that revenue loss scheme is in place, it behoves on the national government to make sure that they support the local manufacturers through that scheme and other schemes that are within the countries to ensure that their products are out there in the common market. There are also various incentives within the Afri-Exim Bank, as well as ADB that should be able to promote, manufacturers within the local national level to export outside their national boundaries. Because the truth of the matter is that this is a wide market, and it's like I mentioned earlier on, it has the population is 1.3 billion people. Whatever you produce in Africa, you can effectively sell and make your profit within Africa. So it's very, very important. And if the payment system platform becomes operational, it cuts out the cost of funding or the cost of settlement in the foreign currencies, because it will be quoting and trading in your local currency that you're already used to. And so corresponding bank relationship cost is eliminated, and so many other things that will free up money for the manufacturing sector to borrow from. Some of our countries, most of our countries, Cote d'Ivoire, Senegal, Nigeria, Gambia, they have homegrown export promotion products and services that are government funded, that should encourage such export of manufactured goods outside the shores of the local government. So I think there are so many things that can come on board in this area. But it is also very instrumental that once that scheme is set up, it frees up and levels up the revenue base of each country, so that they don't now withhold funding for manufacturing sector. I hope that has taken care of that.
Yeah, that's very, very clear. Thank you, Dr. Ibuna. Final question. This is for Mr. Ifyok. And it's just what are the fiscal incentives of private companies to raise funds on regional capital markets? And the fiscal incentives that will spur private companies to raise capital, whether it's issue bonds or list equities on regional capital markets. Mr. Ifyok.
All right. Thank you very much for that. Now, there's no framework yet in place in terms of talking about on the continental level. But what can only happen right now is that I can only say that it's going to be maybe a market-driven thing, because the way our economy is in Nigeria is market-driven. And I'll explain that to you. Now, you can have private companies that can come raise money maybe by private placements, or they can also raise money by investment through private equity funds. And it's all about the issue of the negotiation in terms of the fund providers looking at what expected returns and what potential they can gain from that vis-a-vis other comparable investment there. But as a framework, currently for now, there in terms of because the question is on the continental level, there is really not yet in place. That's the truth, telling you the truth right now. But what is there is the fact that those kind of private companies coming to raise up capital in Nigeria, and they are assured of the fact that they can have, if they have good potentials, definitely they will have fund capital providers who will look at them. Now, what the SEC does is this: is that for such kind of investments, we treat it in such a timely manner. We just give approval based on disclosure, so we don't waste time in that regard. So you can get an SEC badge, an SEC approval, and the fact that a fund can put in money into a private company, and in that regard, that can give it a continental acceptance or a global acceptance that this company is invested in has obtained funds from a SEC-approved private equity fund or a venture capital fund. But on the continental basis, there's really no framework in terms of providing incentive. Thank you.
Yeah, thank you, Mr. Ifyok. Thank you, everyone. We're gradually coming to the end of the session. Thank you to all our speakers, starting from His Excellency, Mr. Wamkele Mene, the Secretary General of the African Continental Free Trade Area Secretariat, Dr. Amenube, the president of the African Securities Exchanges Association and CEO of the BRBF Stock Exchange, Dr. Ngozi Egbuna, the Director General of the West Africa Monetary Institute, and Mr. Efiok, the Head Investment Management Department of the Securities and Exchanges Commission, Nigeria. Thank you, everyone, for attending to this webinar. Thank you, the audience, especially for your patience. We apologize for the slight running out of time. Once the webinar ends, you will see a survey on your browser, and we appreciate if you could complete the survey and provide your feedback. For the questions that were not answered, we will take note of them, share them with the speakers, and then send the responses back to your dedicated emails. You'll receive a follow-up email within 48 hours with a link to view a recording of today's webinar. Also, a webinar report will be posted on the Making Finance Work for Africa portal. On your screen, you can see the email address should you want to send us an email. It's secretariat at mfw4a.org, so you can share an email if you have any other questions. On behalf of the Making Finance Work for Africa, the African Financial Markets Initiative, AFMI, the Capital Markets Development Trust Fund, CMDTF, thank you for joining us today. And, please continue to stay safe. This is the end of the webinar. Thank you.
Thank you very much.
Thank you.